All right, good morning, everybody. Today is Thursday, December 11th, and we are currently um we are yeah, Thursday, December 11th. I'm sorry. So this week and last week has been not the best for market open. We've had a losing streak. And yesterday I just realized nowadays I don't even check Forex Factory. Yesterday I did realize that it was the FOMC meeting that has, and market opens in about 4 minutes. We had the FOMC with the press conference. So typically I don't trade. If there's any day I don't trade, is this Wednesday, and I think it's like every 3 months or something, this FOMC with the press conference. So I'll be doing a better job of looking at Forex Factory, especially for the only one I care about is that one for the FOMC with the press conference. So yesterday I shouldn't even have been trading because historically I've lost trades during that FOMC event. And in any case, FOMC in any case is normally bullish, and you can see yesterday market open was a sell, and it ended up, coming into profit but reversed back up. So in any case, any trades during FOMC Wednesdays should be at the very least maybe tilted towards buys. But I'll do a better job of looking at that. This is just some structure entry trades that I've been looking at. This is one trade I took yesterday. Um, and I normally draw these blue lines here just to show where structure is, but I'll be also trying to identify more structure during the live sessions. And for these ones, I just normally set a what is it called? A a pending order. And these structure entries are pretty neat. You don't need any indicators, you don't need anything. All you have to do is look up where there's been intersection between two candles, and then you're looking at the wicks, and then it's literally just two candles, not more than two. The idea is that when price gets back there where those candles have intersected, you'll have a reversal back down. So for example, right now, I wouldn't be looking to take any other sell here, which is I'm actually glad today's market open is for a buy. So we'll see how this goes. So today's market open, intraday market open is for a buy. I'm just setting my accounts up. So let's see. Hopefully today we get a win. But this week and last week have been terrible for this market open entries. Let's see. So today this is for a buy. Let's see. Hopefully we get a nice push. For this other entries here, let's see. Mm, Look for a buy here. So push this blue lines here, here. So remember for these areas, this is when I'd mentioned that if price gets to any of these zones, I would be looking to take buys as well. So let's see how this goes. All right, so market is about to open. Market just opened. All right. And I think this is the second one. 5, 4, 2. Perfect. Did that go? Okay, perfect. All right. So this is currently running the intraday market open entry. And let's see if we can push up here. So ideally, we would be looking to break. So remember when I said I wouldn't be looking to take a sell if price comes back here because we already have this liquidity that already went down. And then price typically will get a big shoot up here from that previous sell momentum. So I'm pretty confident that this will push up here and will push up heavily. So let's see. All right. And here. There we go. I don't think unless we form an SAR here, I don't think we'll get anything. So let's just look at this and see. So this is 48. Uh, All right, there goes that push. Nice. Uh, this market open scalp also. This market open scalp hit TP as well. I think we're almost at so almost at TP, so hopefully we can get that last push. All right. All right. For some of my accounts, just hit TP 40, 48. Actually, for all of my accounts, I'm out of that position. Looks like I'd gotten a better entry, but this should hit. And there you go, full TP for the intraday market open entry. So today was a good price movement. So this should at least help with some of the losses for this week. I think this whole week, Monday through Wednesday, there was like losses. So those are minus 3R. So just got 2R today. So just down minus 1R for the week. Last week as well. Last week was terrible. Last week, every single day lost. So you can see here this win. So before this, there was a 8-day losing streak. So 1, 2, 3, 4, 5, 6, 7, 8. I think the previous 2 days were winning. And this kind of lines up with the historical back test since January. I think even since January, the longest losing streak for this strategy was an 8-day losing streak. But also on the other hand, the longest winning streak was an 8-day winning streak. So, and that's why I typically go for a 1:2 risk to reward, so that you get to recover those losses pretty quick. And after like a losing streak and after a winning streak, you normally, after a losing streak, historically, I saw that, there's like a high probability of having a winning streak. And same thing after like an 7-day or 8-day losing streak, there's a high probability of having like a brief losing streak. So hopefully the next entries from tomorrow, price moves the way we expect it to move on market open. But yeah, other than that, I really I don't know if we're going to have any other entries. The only other thing I'm looking for is if price gets here before 11 a.m., before these two zones I've marked up here, I would be looking to buy US30 at a bounce of these areas at 48,104 and 48,052. Play here, similar to what I'd drawn here or similar to what I took here. If this candle comes up here, this hourly candle, and closes and has a wick intersection with any of these wicks right here to the left, I would be looking to take a sell entry. So let's see, we'll see how this hourly candle, and it closes in 19 minutes. So we'll see how this candle closes. If it creates a wick that intersects with any of these wicks, either this one or this one, that would be a structure play for a sell. So we'll see if that happens. And if we do get an SAR anywhere within this zone, looks like it would be valid for a sell, but we'll see. But if we break above these zones, of course, there won't be any sell entries for any SAR or EMAs, because I think this high right here, 48,600-ish area or 500-ish area, is the high of this. Yeah, so it would be like the all-time high. All right, so let's see. Yes, so if this hourly candle closes this way, and I'll show you guys how I'm doing this. If this hourly candle closes, you can see there's an intersection between this wicks right here. And typically you look for just one wick. I do see here we do have like multiple wicks. So my rule of thumb is if there's multiple wicks around the same amount of candles, like the wicks have to be at least 5 candles apart for them to count. So as much as we have 1, 2, 3 wicks here, like I'll just consider the highest wick. So based off of this intersection here, the entry will be, and we have 13 minutes. So we'll see how this candle will close in the next 15 minutes. So if this is the high of this candle at 10 a.m., so what I'll end up doing here, I'll just set up and then, so I typically set 2 trades. So one at the intersection of the wicks and the other, I set it 50 points away from that area. So, and sometimes you wanna make sure that you wanna zoom in and make sure that it's literally at the high of the wick, because sometimes you can be like pips apart, and that can literally mean, since it's a pending order most of the time, that can mean the difference between you missing the trade and you getting tagged in the trade. Now, 2 entries, and this one I go for 75 pips stop loss, and I need to 75 pip stop loss. And so we go for a 1:3 risk to reward, or you can even go for a 1:4, but 75 pip stop loss or 75 point stop loss and 225 points. Like for a 1:3, 225 points TP. I will just call it structure cell. And then the other one is 50 points away from this area. So 50 points away, this would be 481.3. So you give your, because sometimes what will happen, because there's typically a lot of liquidity at that area of intersection, typically a good amount of times, the best case scenario is that price comes like exactly what happened yesterday, right? So if we see what happened yesterday, price came back exactly to where I'd set my pending order and pushed back exactly like where I wanted it to go. But sometimes what will happen is that price will push beyond that intersection and then push up and then before coming down. So you want to either have a wide enough stop loss for your first entry, or you can do like 2 entries. Personally, I prefer just doing 2 entries. So the first one will be here. The second one is 50 points away from here. So 50 points will be 48,481.3. So somewhere there. And then I do the same thing. And again, this markup is only assuming that this current candle's high will be the hourly high of this current candle. And we can do this structure cell. And we used to trade this way back. It used to be one of the trade setups we had a little while back. And given the December and January market movement, I just, I'm trying to diversify more because again, some of these scalp entries, even upon backtesting, January and December is not really the best time to be trading them. Anyway, so let's do a little backtesting here so that I can show you guys like typically this this setup. Okay, so let's look at this entry right here. So if we look at this entry, So ignore these current blue lines where they are. So if we look at the intersection of these two candles, so again, what all you're looking at price action to the left of the chart, and you're waiting for wicks to be created either to the upside or to the lower end. So here, automatically there's 2 wicks. And personally, I use the hourly time frame. Structure sell here. Personally, I use the hourly time frame. You can use the 15-minute, but personally, I just prefer the hourly time frame. So 48,032, and keep in mind for me, I do 2 entries. Now, if the first entry gets tagged in and goes to profit like yesterday, I'll delete my second pending order. 48,032. So the second entry would be at 48,082. 48,082, somewhere there. And as much as I'm eyeballing it right now, you really don't, you want to be very specific. So you want to zoom in and see where the candles intersected so that you don't miss out on, you can literally miss out on a trade just by a couple of pips. So here, like for example, for this particular day, I would have identified this as my area of structure or bearish structure. And if we play this out, you can see the first give me a second. You can see here, and this is the importance of either setting a wide enough stop loss or having 2 entries. So you can see here, the first entry would have gotten stopped out, right? Because the first entry actually got tagged in exactly. And I think for this one, I would have deleted this second one. But anyway, so let's go back here and see what happened. So when the first one was tagged in, you can see price came and tagged it in exactly there. And then the next candle pushed up. Actually, yeah, this one would have gotten tagged in. I thought it came down first. So the first entry would have gotten stopped out, and then the next entry would have gotten tagged in. And this is the importance. Either you have a wide enough stop loss, I would say maybe 100 points. But if you go for 100 points and you want to go for 1:3 risk to reward, of course, you're aiming for a 300-point TP on US30, which sometimes is a bit wide. But for me here, I prefer just going for 2 entries. So you can see the first entry would have gotten stopped out, but then the next entry would have gotten tapped in and price would have come down eventually and hit TP. And same thing, I'm pretty sure here there's some buy entries we can look at. So if we look at buy entries to the bottom here, so sometimes this is a little tricky, especially when you have an area with a bunch of wicks. But remember, the rule of thumb is that if you see an area with a lot of candles, if you see an area with a lot of wicks, the distance between, in order to identify the wick you're going to use for intersection, make sure the wicks are at least 5 candles apart. So definitely this is our first candle right here. First candle. So count 5 candles from here. So 1, 2, 3, 4. 1, 2, 3, 4, 5, right? So we have these 5 candles here. Pick the candle with the longest wick. So for example, here, I wouldn't have traded an intersection between this candle and this candle because they're literally right next to each other. I wouldn't have traded, we've already marked our first candle. I wouldn't have traded an intersection between this candle and this candle because again, guess what? They're right next to each other. Now here we have 1, 2, 3. I wouldn't have traded an intersection between this and this candle because they're within that 5 candle threshold. Then what I end up doing is that since I've already counted my 5 candles, this now will be my first candle. The reason it will be my first candle is because as much as initially I'd use this candle to count my candles, is there a candle that has a lower wick than the first candle I had identified? And yes, within the 5 candle threshold. So within these 5 candles, which has the lowest wick. So it's this one. So I'll base my future structure on this as my first candle. So what we do is that we keep playing it out, and then there you go. So now you have this candle, and I would have wanted, again, you keep doing the same thing. So you want to keep counting your 5 candles. So as much as now this is my first candle, we do have this other candle that's within a 5 candle threshold. So now my first candle goes to this one. And then now I have to wait at least 5 candles before another wick is formed. So I go ahead and delete this candle right here. And now this is my first candle, and then I count 5 candles. 1, 2, 3, 4, 5. Now, if any other candle closes and gives me a wick that intersects with this candle right here, that will be my area of intersection. That will be my area of taking buys. So let's see if we form any intersection. There we go. So the intersection here is here, these 2 candles. It's my first candle, which is here, and then this one right here. So that's my area of intersection. That's my area of bullish structure. So then what I end up doing is I end up setting a pending order here. And of course I have to manually do this because I hadn't saved it. So 75 pips, save as structure by, so 75 pips, stop loss 75 pips TP. And again, just eyeballing this, 50 points away would be 47,711. And then structure buy. And let's see if at any point price came down here. All right, so here we can see for this first one, price came down here, pushed up, but then ended up getting stopped out. And I think for this other one as well, for 50.711 here, same thing, pushed out and got stopped out. So this buy entry here, unfortunately, would have been a loser. But you can see what you want to see at these areas of intersection is this rejection in the market. All right, same thing here. We have one last area of a structural buy, which hasn't been, actually, wait, this one was already tapped in. So we have this other area. So if we look to our left, as much as these 2 buys lost, then we come here and we look to our left. What do we see on our left? On our left, we see this huge candle with a huge wick. I'm sorry, this huge wick of this candle. Then, and typically you want it to be the lower low, like a lower low. Then in future, we want to observe if there's any other candle that's going to intersect with this candle. So we play this out, and we already know that here, we created a wick right here. And again, the key thing, you want to zoom in and make sure if you're setting any alerts or if you're setting any pending orders, that it's literally at the area of intersection. To be safe, you can go like a few points in such that you're able to see the low or the high of that candle in order to make sure that don't miss out on any trade just by a few pips. So here, if we look to our left, you can see that there's an intersection, and here you only want an intersection of max 2 wicks. You don't want anything higher than that. You don't want to have an intersection area of 3 candles, because if price comes back to that area, it will most likely blow past it. And that actually can be another strategy of taking a trade in that direction. But anyway, that's another story for another day. So typically here then, what we would have done is set up a pending order, or if we are on the live session, can set up an alert there, and that we set up another trade 50 points away from here. So this would be 424.4 in order to account for any push down. And then there you go. So for this one, the second trade wouldn't have been triggered, but the first trade would have been triggered. Now, let's assume you took two losses on this trade, on these two trades right here, right? You took two losses. Here, since we're going for a 1:3 risk to reward, you would have had minus 2R here, but then guess what? You would have had plus 3R, so you'd have been up 1R trade. And then imagine now you caught this other sell from yesterday, you'd have made another 3R, so you'd have been up like 4R between 2, 3, 4 trades. And now here we are looking for a sell. So the hourly candle already closed. Perfect. So the hourly candle already closed. So what are we looking at here? We want to look at the intersection of the candles. So we've already determined that, hey, okay, this current hourly candle here intersects with this high candle here. Perfect. And then the intersection area is going to be at the high of this candle. So what I will do here, I will go ahead and set a pending order at the high of this hourly candle, and I'll actually go ahead and do that. I'll actually go ahead and do that on my account here. Let's see. So this is the hourly time frame. Pending order. So this is a sell limit. 5 lots. Price. Mm, right. Stop loss is take profit is right. And then of course, like make sure all right, make sure that make sure at the very least, like if you zoom in on this, at the very least, like maybe you can see the high of this wick. So just somewhere just below that high so that you don't miss it. Like not exactly at the high. And then, of course, the other one, we set two trades 50 points above that. 50 points. Pending order limit. The first one is Okay. We'll see if this how this goes. Regarding the SAR and EMA entries, I really don't see the zones. Yeah, I mean, it's possible you get an SAR entry, but I'll stay on for the live session, like maybe 15 minutes. We'll see if this gets tapped in. And also there's still buy entries here if price comes down here, but for this buy entries, I would only take them. Interesting. I would only take them if price pulls down this far. Um, All right, so let's see how this goes, and we'll see if it gets. If this ends up reversing back from here and coming and hits like where that 1:3 would be, I will cancel my pending orders. The reason is like, and that's what I was mentioning, like when you zoom in, uh, do you want to be accurate on where you set your pending order? Because some of these things, they're very instant. Definitely the entry was at the high of this previous hourly candle. It did come in like a point away from it. It did come a point away from it, but if it reverses down and goes down like that 225 points, I'll just exit my or close out my pending order because price came literally next to that, like within a point or two of where my pending order was. And you just want to call it as that's where the trade would have been. So when you're setting your pending orders for this, maybe you want to give yourself some leeway from what your area of the candles. But so long as it doesn't come down like 225 points, I'll keep this pending order as is. But you can see how this one is so it's a bit too precise, such that a little mismatch in the price of your pending order, you can just miss out on it. An AM candle. So the first one is tagged in. Let's see, we do have this other high. So two things here. Given what day is it? Thursday. Given that it's Thursday, we'll probably create a new all-time high, either today or tomorrow. But keeping that in mind, that we are around the all-time high. So two particular things here. One is that we can have a spike up and correction back down with a wick. In that instance, what that would create, and given that it's and mostly the all-time highs, they mostly or they're a good amount of time create them on Fridays. But within today, we might have a candle, an hourly candle that pushes up and then pushes back down to create a wick. And then it would intersect with the current all-time high, which is at 48,459. So call it 48,460. So 48,460 will be an area to watch for intersection. Another hourly candle today. Typically, I don't like trading next to the all-time highs because pretty much here, of course, you expect a lot of people expecting that sell, but price typically goes back up before coming or pushes up before coming down. But 48,460 is a good area to watch price at. And for our SAR and EMA entries, I really don't see anything happening today because we, of course, have created a new all-time high. So there's really no supply zone above here. So both, for me, both of those positions have tagged in. The first one can easily lose given that price is pushing up. So we'll see if the second one ends up holding. But again, keep an eye out on that 48,600, especially if we create a candle with a big wick to the downside after a push up. But it would have to be an hourly candle. All right. This is just going back and forth. So area to watch, depending on how, so this second one is still running in and out of break even. Depending on how this candle closes, if it does close bullish, then this our first candle, right? So the first trade based off of this intersection, the first trade based off of an intersection of this and this got taken out, got stopped out. The second trade is running, the one that's 50 points away. Now, there is another possible setup, which is based off of the all-time high or the previous all-time high, which is this, which would be our first candle on the hourly time frame. And then we are looking for the second candle. And the second candle can be, depending on how this candle closes, this 10 a.m. candle closes, if it closes below 48,000 before the previous all-time high, which is 48,460, that would be our second candle. And then again, you would wait, or you would look at the intersection of that and have like two pending orders. The first one at the intersection, which would be the high, the previous all-time high. And then the second one would be 50 points above that. But if the current hourly candle, which is the 10 a.m. candle, closes above 48,460, now this candle, and if it does create a wick, this would be our first candle, and then we would look to the future to get another potential wick, which would probably come in sometime during next week or something. Or actually would come in possibly even tomorrow, depending on how those candles create. But keep in mind, so tomorrow is a Friday, and since we've already created a new all-time high today, we are probably more than likely going to continue pushing up. But my hope would be, or my expectation would be, at the very least, we push down first before pushing back up. Same thing as what happened yesterday, where we had this push to the upside and then price came down a little bit before having this bullish move. And typically, of course, you normally expect US30 and this indices to close bullish for the year. But we'll see how that goes. But other than that, I will see you guys tomorrow.